This is Cary with Wicked Signal, and today's Wicked Signal video, recorded Sunday, December 20th, 2020, is on Tesla Incorporated, symbol TSLA. If you don't know anything about Tesla, and I would be very surprised if you didn't, it is an American electric vehicle and energy company based in California. Elon Musk fame. They produce electric cars, battery energy storage from home to grid scale, solar panels, etc., etc., etc. What I like about the stock, and I'll show you in a moment, is that we have yet another buy signal that should play out over the next 3 to 5 weeks to a couple of months, and gains actually of roughly 35% from our present price levels of $6.95 a share. And I'm going to walk you through support, and I'm going to walk you through and show you my target. But first, let's take a look at the chart itself. This is just to show you where the stock has been over the last year. In February, it rallied to 193.79, broke a month later, COVID low, 70.10. And then most recently, 695 all-time high was put out last week. And in the process, I'm going to actually open this chart up a bit. And this square, this black square area, actually represents the area I'm going to show you. I'm going to open it up so that it looks more sensible. And you can see that we pushed through a channel top last week that held the previous week. But this rally has a mind of its own and has no interest in being stopped, at least by that formation. And so that formation, which this week is at 673.99, the week of Monday, December 21st, is our support. And it is an area you can buy into. Do you put a resting bid at 674 even? Well, that would be your prerogative, sure. Do you buy it just based on last week's settlement at 695 even? Yeah, I'm not going to argue with that either. Do you buy a higher opening on Monday? Sure. This is a market that should continue north. I'll tell you where it turns bad in a moment, but first, let's take a look at the upside scenario here. Before I leave and move to the next chart, just as per usual, once again, these levels are separated 4 full weeks apart. So you can get the location, you'll know the location of this support channel. It was resistance, now support. 673.99 rises to 716.87 the week of Monday, January 18th. Subtract them out, divide by 4, and you'll have the rate at which that channel is rising every week all the way into later January. So you'll know exactly where support is as we continue into January trade, and above which I am expecting, I don't know, 3 to 5 weeks. You know, it took 3 to 5 weeks from the first channel bottom to the most recent channel top that we settled above. So we could actually be in for yet another one of those. So this could be lickety split. And this is the 35% talking about, because from present price levels of $6.95 even up into the 930s, that's a 35% gain from current price levels. And this could play out quickly, like between now and the end of January. And in fact, I'm expecting as much. I don't think it's going to take more than 2 months. I think it could be, over the next 3 to 5 weeks. And by the way, that 890.49 to 933.35 area, I don't like them as sellable resistance areas, but I do like them as targets, as a realistic objective. When we get up there, if you are long this market, you could consider getting out of some. But I think just hold on for the ride, because there's really no way of saying when these markets are in their sort of stratospheric, hyperbolic move, as this one is. In the commodities world, we call these church steeple rallies. But oftentimes in the commodities market, what goes up comes down with equal fervor. That's not necessarily true in the stock market. This is a stock that can continue going up and hold its own as it continues into later decade. So who knows where this is going to stop? I just am saying right now that between now and the end of January, I think we have a realistic 930s objective. And that remains true above 673.99. Bullish above, anticipating the 930s. There's really not much left to say about that. Let's take a look at the downside. Where am I wrong? Well, the first sign of concern should be, a daily settlement perhaps this week below 673.99. That could usher in selling down to 630.49, which is still above last week's low. And it is that 630.49 formation that I would be concerned with. That would be my bailout point, that if we settled below it. So, if you buy the 670s, and the market doesn't follow through to the upside this week. And in fact, by later in the week, it just comes tumbling back and closes below 649. No good. This is a stock you should not be long. I'm not prepared actually to say exactly where it'll go at that point in time, but I would venture to guess somewhere in the upper 400 to low 500 area just by looking at this chart. So bullish. Above 673.99 through January, expecting the 930s over the next 3 to 5 weeks. Get out of this trade. Don't be long Tesla if you're looking ahead into later January if we settled this week below 630.49. But at this point in time, all systems seem to be go to the upside. And that is it for this particular Wicked Signal video on Tesla Incorporated.